Welcome to Loaded and Rolling Live. I'm Thomas Wasson. We're having a special live and in-guest live edition. Going to be welcoming on shortly Mike Baudendistel, head of Intermodal Solutions at FreightWaves Sonar. Got a lot to talk about. Earnings season, Q1. It's been a lot of drama, some laughter, some crying. Depends on if you're a shareholder or not. But there's some big changes and some subtle trends that we just want to dive into, especially in the intermodal world and how trucking relates to it. And Mike, welcome to the show. Pleasure to have you on live. First, you used to be a former analyst, Stiefel guy. What's the vibe so far as you've been checking out Q1? What are some of your early thoughts?
Well, I think the earnings have been a little disappointing. I think you go back a couple quarters, there was an expectation that maybe the market would turn around by now. The market tends to improve. The freight market tends to improve in the spring. Usually March is the month that sort of makes the first quarter after a slow January and February. I think March was a little disappointing. And then there was also some interesting trends on the company specific side, which I think we're going to get into. On JB Hunt wrote up an article, to that effect, talking about how maybe you could have used sonar to better forecast the earnings, which I'm happy to talk about.
Let's dive into that article because you had a really great article. One of the ones that talked about was the intermodal share, rail and trucking, and especially highlighting JB Hunt. For folks who haven't read it, tell a little bit about what went behind that.
Sure. So the title of the article was "To Stock Analysts, Container Size Matters." And the reason the container size matters is that international containers are going to be your 40-foot containers or 20-foot containers or 45-foot containers. Domestic containers are going to be primarily the 53-foot containers. And the international and domestic really should be thought of as two distinct markets. And so if I'm a stock analyst and trying to trade JB Hunt or Hub Group or Schneider, I want to just look at that domestic intermodal segment. That's the segment that they participate in. They don't participate in the international segment, which was basically a container ship line sending containers all the way inland to Chicago. And that's an important distinction, and it's a distinction that's hard to make sometimes with a lot of the data that's available. So it's pretty readily available to look at what the Association of American Railroads is publishing, because they have a packet that comes out every Wednesday. It's inexpensive. You can go check it out, but it conflates international and domestic, and it also conflates loaded and empty containers, what they call revenue empties. The same thing is true if you go to the investor relations sites of the Class 1 railroads. Those include international and domestic. And sometimes those markets are kind of trending in line, but during the first quarter, they were really diverging. The international intermodal was up over 20% in terms of volume. And the domestic intermodal, I had up 3% in terms of loaded containers. And so when people look at the data where they conflate those two data series, they were up 12, 14%. So I think the expectations going into the quarter were really strong. And then JB Hunt reported volume that was about flat, and stocks sold off. It might have sold off for other reasons as well. But I think that the expectations were too high. And that was really the kind of point I was making with that article, is you can use sonar, get more granular, help that to refine your financial models going into a quarter.
And that's something I've heard a lot. I see it on LinkedIn as well, like you said, the overall imports. And then when it gets put on the rail, the international and domestic being combined, it's almost like a pump fake. When that 20% up, you're seeing that. Are they just going straight to Chicago and then gets matriculated out? I'm assuming you're just putting it on the rail with the large containers. You're not even trying to transload it, and that's where like a JB Hunt comes in, trying to do some of that, putting it into like a 53-foot container, right?
Right. So imports will find their way to domestic containers as well as international containers, because if they're part of the point of transloading is you can make a decision of where that freight goes closer to the point of consumption, sort of later on in the supply chain. And a lot of it has to do with, are there ocean-going containers that are available in the marketplace? And you can think back a couple of years, there just really weren't a lot of those international containers. And so they wanted to get all that transloaded to get those international containers back to China to get them filled up, because those container ship lines make all their money on the head haul. But it's a different situation now where there's plenty of excess ocean-going containers. And so the container ship lines are happy to send those containers inland to someplace like Chicago. The shippers are happy to do that because it's cheaper for them. It does tend to be slower than domestic, because domestic will run on those domestic trains, which tend to be higher service trains. But if something's not terribly time sensitive, it's going to go in a warehouse anyway. It seems like it's kind of a win-win for carriers and shippers. It's not great for the domestic intermodal companies, but they seem to be taking a little bit of a longer-term approach.
That's one of the cool challenges because we also see situations where intermodal cost savings. We have a chart. Let's see if we have the intermodal cost savings. There was a cool thing that you had sent to me on that cost savings chart. Let me see if we have that here. We have the contract savings index, and it looks like there are some divergences in that as well.
Yeah, so I can explain this. And so what we do here is we have data from a company that processes transactions. I think we're going to announce who it is relatively soon. And what we're doing is we're taking transactions where you have the same 5-digit origin and same 5-digit destination. So zip code, same zip code. And in most cases, it's the same shipper moving freight from the same 2 facilities. And we're looking at transactions where they did that on truckload and intermodal in the same week. Oh, wow. So basically eliminating all of these variables where do you have to go through downtown and all those things. And what we find is that the spread is outlined in this chart, and you can see the spread in white there is about 9% overall. But really, it's important to break that down by length of haul.
Yeah.
So intermodal is much more defensible against truckload in the longer lengths of haul, and that's what that green line shows. It shows currently there's about a 17% spread on the longer hauls, which we define as greater than 1,200 miles. That's going to include your LA to Dallas, LA to Chicago. So that's pretty defensible. And I should mention that includes fuel on both modes because fuel is significantly less. The fuel surcharge is significantly less on intermodal. It's about, let's call it half the fuel surcharge. But then when you look in that same chart, that purple line is the shorter lengths of haul, which we define as less than 800 miles. That's about 5 or 6% only, which is low. I mean, it's low overall. And then when you look at where it is combined, about 9%, you tend to think about 10 to 15% is kind of the range. So it is a little bit lower relative to history. That reflects the fact that it's a loose truckload market and very competitive in what they call the local east lanes, which would be your Chicago to Atlanta. Those lanes are really competitive.
Dallas, Atlanta, Chicago, eastern half, east of the Mississippi almost, including that Dallas market. That's kind of where the money can be made because it's so cheap. It's cheaper to put that on truck. But if we're in LA to Dallas, LA to Chicago, that's when I just want to put it on like a rail.
Right. Those shorter haul lanes, we've seen the spot rates in a lot of those lanes come down. Wrote an article recently just digging into the Chicago to Atlanta lane, which is very competitive. And some of those truckload rates went from high $2, like $2.80, $2.90 earlier this year to $2.33. And it seemed like there was a subsequent drop off in some of the domestic intermodal volume in that lane. They're not going to lose all of it, but for some, would rather just have the higher service and more incentivized to go highway.
And that's putting pressure on the Class 1 railroads, I'm assuming. There was some activist talk. There were some folks talking about trying to get out of it. I think it was Norfolk Southern.
It's more than talk. It's going to be a vote here coming up very shortly at the shareholder meeting. We'll see what happens. It seems like there's a lot of momentum on the side of the activists to instill a lot of the board members that they have proposed. We'll see if they change out the CEO and COO. They have an idea of who they want for those roles as well. So it could be a wholesale changing of the guard, there. And Norfolk Southern, in response, they've gotten out of some of the lower volume intermodal lanes. Now, a lot of those were the international lanes, but they said specifically volume that was running to New Orleans, volume that's running to Birmingham, since those are lower volume lanes, not worth their time doing that anymore. Getting out of some of those lanes. They're really dilutive to the margin if you don't have enough volume.
Because rail's all about that leveraging the margin. That's why that fuel surcharge spread out amongst all those carloads. That's part of the wins. Looking ahead as well, I think one of the interesting things is trucking moving away from trucking. JB Hunt has this big not LTL, but intermodal exposure that deals with Walmart, trying to get more into this intermodal. We see Knight Swift talking about new CEO wants to expand into LTL, get into the Northeast and the Southwest. We're seeing these gains. For a casual observer who thinks of a trucking company as a trucking company, is this something where a recent phenomenon, or has trucking been trying to not become trucking if you reach a certain size for period of time now.
Yeah, it's been an ongoing trend to not wanting to own the assets. I mean, when you own the trucks, you're taking a big asset risk that you have to keep those assets utilized and make payments on them. You'd much rather be asset light, and also you'd much rather have something that's defensible. Just truckload is too much of a commodity, whereas what we've seen with intermodal, it's relatively concentrated. You have like JB Hunt's a good example of that. I mean, it really has a large share of the overall market, but that's because they can make it work, leverage their size, leverage their ownership of the containers. It took a long time for them to be able to do that effectively. But these transportation companies are trying to have something that is, segments that are defensible and also segments that reinforce each other. So if there's, loads that, maybe if you do have a asset heavy trucking company and you have loads, maybe you can take loads from the brokerage side and move things across modes.
And that's what I'm curious about as well. Rail versus LTL, harder to do. What's the better moat, I wonder? Because LTL, you have to have the warehouse, the operations, the back and forth. But at the same time, intermodal, some of these rail companies don't have their own cars. So if you're the one with the cars and you got to deal with them, then you're almost like the chosen one.
Yeah, I would say for railroad, it depends what sector we're talking about. I think for rail carload, it's a very significant moat.
Yeah.
Because you can't build any more railroads. The track is set. There's usually 2 railroads in a particular market. They're not big on undercutting each other on price. I mean, really the biggest threat to price is the Surface Transportation Board, which economically regulates the railroads. For intermodal, there's less of a moat because the highway is always a competitor there. I mean, that's why intermodal is exempted from Surface Transportation Board regulations. It's deemed to be always competitive. Now, is it really competitive on something that's a very long length of haul? I mean, that's a debatable question. So I would put rail carload as being the most defensible, and then LTL followed by rail intermodal.
And I thought there was some interesting. Saia and Old Dominion had some comment about pure play trucking, poaching, encroaching. And I'm kind of want to just get some of your thoughts here, just as an analyst, looking at trying to parse together, why would we say the things we do? One of the things I'm curious about is if this is something where I'm complaining because trucking companies are just willing and customers are now willing to just use a whole trailer instead of putting it parceled out like an LTL shipment. Or is this something we're seeing an evolution where this Knight Swift, I think Schneider, a few others that are now offering LTL options, whether they own it, they don't own it. If that's an encroachment to where it's like, well, I got like 10 extra trucks just hanging out. Why don't I just put some shipments in them just to keep them rolling? Is there any kind of thing that stands out to you whenever we hear this grumblings? Because I would assume something like an Old Dominion is a really good, well-run company. Why would you be worried about some trucking company?
Yeah, it's one of the best there is in terms of being well run. I get the sense that it's just the truckload companies, because it's been such a weak market for such a long period of time. A lot of them are willing to take freight at less for doing it for less than they should, and that might mean using a full truckload for what normally would go LTL. I mean, sometimes when things are tight, you hear the reverse of that you break down shipments into LTL. But I think it's just kind of desperation on the part of the truckload carriers.
That's why I was impressed. I didn't know you've had a longer experience reading through transportation earnings. Does it ever feel like it gets this desperate in terms of complaining about bids, railroads threatening to get out of intermodal and things like this, LTL complaining? Like, is this something that's kind of out of the ordinary, or is this just something where maybe one of them said it and now we're all just going to get some shade?
I've seen similar situations during recessions. I mean, that 2000, as an analyst during 2008, 2009 recession, that was really, an incredible situation. The railroads getting out of intermodal, is very unusual. I mean, they're not getting out of it, but at least downsizing a few lanes here and there, because intermodal was the tremendous growth area within surface transportation, really for a number of decades. And it was only the last however many years, 7, 8 years, that the intermodal volume growth has stagnated. And it's stagnated because they just really, the service wasn't there for a lot of the pandemic. I think that, I've been more encouraged lately that intermodal might really be a growth area again. because of things that, I mean, some of the things JB Hunt's done have been impressive. Like at our conference, I believe that was last year at it might have been Cleveland when they announced it. They talked about quantum and expanding intermodal to some OD pairs that really haven't really been kind of underserved by intermodal, like Denver was an example, Phoenix. I mean, some of these growing areas, which they hadn't used intermodal a whole lot. There's a lot more sort of innovative ways where the railroads are trying to collaborate to move more freight north-south, and maybe in combination with some of the domestic intermodal companies as you think about growth into Mexico. Just the investments that BNSF and JB Hunt are making. So some of these collaborated investments, BNSF with the terminal, JB Hunt taking up its container fleet to 150,000. They just, that's their plan. They acquired the containers from Walmart, 16 or 17,000, containers from Walmart. So it was a way to expand their capacity, expand their market presence without adding capacity to the overall marketplace.
Yeah.
So that was a good option. And, a company like JB Hunt, I mean, it's really kind of, and really domestic intermodal in general is over-resourced right now. They have more containers than they have freight. And it's costing them here in the near term. I made that comment, about near term, longer term versus near term, a little while ago. It seems like those companies are managing, at least JB Hunt, managing more for the longer term because they have more costs associated with having those containers in place. Depresses near-term earnings somewhat, but when we do get a turn in the overall freight market, they'll be able to handle more of that volume coming their way. Intermodal could be a little bit more of a relief valve in some of the dense
They want some
lanes.
slack. They're purposely hedging. That's what's fascinating because, like you said, the pandemic, everyone had more shipping containers, more rail containers. So that's the strategy. Instead of trying to scrap a bunch of them, let's just hold this in reserve, see if this is going to work, but we're going to take a beating in the near term. Because you got to pay for them. They're not really.
Exactly. So they have, you need to have some additional capacity in place for when volume returns and freight demand, booms. And we've talked about how freight demand really hasn't been all that bad. It's kind of held up, but at some point you have a capacity crunch, and that will encourage more to move intermodal. And a lot of times when shipper uses intermodal at first, there's a barrier to use intermodal for the first time because they're not sure if the freight's going to make it, if it's going to meet the service requirements, but you have a good enough experience, it tends to be sticky. And I think that's what you're going to see ultimately, but it's hard to know when that's going to be.
So I think we have a chart as well. Let's see if we can pull up the chart on the intermodal volume. Yeah, container, domestic rail container volumes loaded. And this is what's fascinating because you had, we're looking at years prior. And so I think what's interesting is this pull through and the line in white, and we see in blue as well, that a little bit of seasonality even within rail.
Oh, there's definitely seasonality in intermodal. Yeah. So you tend to think of October tends to be the busiest month. And really third quarter tends to be pretty busy as well. Last couple, quarters, November, there does tend to be a peak season in intermodal. A lot of that is related to when imports, come on shore. So it does tend to be sort of, pre-holiday. It does tend to be earlier than you would have for trucking. But when transportation capacity is tight, you will have peak season surcharges. I mean, we haven't seen that the past couple of years, but before then, you would see the peak season surcharges, which you can see pretty clearly in the Sonar product and the INTRM tickers for those that are Sonar users, where we have intermodal spot rates that include all fuel, all surcharges. You'll see those during periods of tight capacity really spike up. And not a lot of intermodal moves on the spot market, but it still reflects that there are times when carriers want to protect capacity for the contractual shippers and other times when they're just not concerned about that. And right now, they're just not concerned about that. They know they're going to have capacity for the big contractual shippers. If a shipper on the spot market wants to try using rail intermodal, I mean, there is that opportunity now to see if they can make it work in their network.
I do have a far-out question for you since we've got about 6 minutes.
Okay, this should be fun.
Here we go. Autonomous, looking at deployments. It's very early in the game. We're in the first inning. We got like 9 more if it's for a baseball game. Mm-hmm. Part of me wonders if the play would be intermodal, but it turns into an autonomous. So instead of moving things by rail, we move it by autonomous truck, but the characteristics and it just basically just supplants itself onto an existing intermodal network. I wonder if that's something, as you look into this, do you ever consider that maybe land trains will become a thing?
It's not that far outside the box, actually. Like, definitely, there's been a lot of discussion on that when I was an analyst, as to is that really the ultimate competition with them? Because if you think about autonomous trucking, where it would potentially work is wide open spaces, maybe with a dedicated portion of the highway. I mean, it's hard to make that work in a congested city environment, but
Yeah.
if you're talking about going from Ontario to greater Fort Worth or something like that, that shouldn't be a problem for an autonomous vehicle. And, potentially that could be even lower cost than the railroad. I mean, maybe not on fuel, but you could maybe have a network where you're filling with, electric potentially, or maybe that would be slower. But it is a concern that the railroads have. It's just, is it, how many decades away is that, type of thing? But it doesn't. And then the other barrier would be, well, would you run those autonomous trucks on just a regular public highway, or would it have to be kind of a dedicated lane? Would you have to build a new sort of separate highway? And then would you have to have kind of a marshaling yard? Because my thought on autonomous in general is that it's easy to drive a truck from Virginia to California. It's just hard to drive a truck from Virginia to Washington, D.C. because that's very congested. So if you had kind of the right marshaling yards, terminals within the market, maybe you could then have the human driver dray the containers.
Well, that's what I was thinking, a railhead almost, but for trucks. The truck terminal becomes similar to like a railhead. You're moving back to back, you're at a location, and then you have two local drivers instead of one long haul driver handling the edges of it. That's what I was curious about. My biggest thinking was there was some paradox where, like they say, any new emerging technology, people think it will remove jobs, but even with the long haul trucking sector, some hypothesize that it will in fact create more jobs, because even though we've automated the worst part of the over the road segment, we now have more emphasis on these drivers than the nodes because it's overcoming the technology of and liability.
Yeah, I'm not a believer that AI is going to put everyone out of work. I'm just not with unemployment at 3%. It just to me, you may have to adapt, and certain jobs might go away, but others will be created. So.
Well, they said that with the printing press too, the Gutenberg. All the monks were so angry when they came up with that printing press because all those people in the monasteries had some really cushy jobs with their.
Well, for every technology, right?
with their nice beer. All right, let's round it out here. Looking ahead for the year, Q4 was all about summer. Now it's just kind of like maybe the end of the year. Even with in the broader supply chain, what are some of the things that folks should probably keep an eye on as we have this multimodal madness, winners, losers?
Yeah, I think there's going to be overcapacity in the ocean segment for some time. There's a lot of latent capacity that is, going to be built, but potentially. I mean, some of it could be canceled, but just a lot of container ships that were ordered during the pandemic when the market was tight. If even a portion of those come to fruition, we could have an oversupply in the ocean market for a long time. I think the opposite could maybe be true in air freight, which I think that's fascinating because, like, all these fast fashion, companies using air freight, like it's taken up a lot of the capacity there. I mean, one of our Sonar customers is in energy, and you don't usually hear an energy company talking about Shein, but he was complaining about how that's taken up a lot of the air freight capacity because that's their business model is they make the clothing to order and then put it on an airplane. And so you wouldn't normally move clothing on an airplane at all. But it's just not expensive enough cargo. So that's something that potentially could be a tight mode. I think I'm not necessarily expecting a big peak season. I think the consumer's starting to get a little tapped out. I think one of the best economic indicators was last week when Starbucks reported transactions down 7%.
Oh wow!
Like when people start cutting back at Starbucks, I think that's something that's purely 100% discretionary and something that people are just watching the small things. They're not going to have the confidence to make big purchases either. So maybe it's a K-shaped situation where higher income consumers are fine, lower income consumers are struggling. But some of those, you hear certain things like that from some CPG companies where their elasticities have ticked up in response to some of these higher prices.
Yeah.
So, I think the consumer, and I wouldn't have said this, a month or two ago, but I think the consumer's showing some signs of being under pressure.
When you don't get the latte in the drive-through, definitely a problem. You mentioned the stock out. Got 30 seconds left. Folks want to learn more. Read some of the stuff you're working into. You have a community as well. Tell us where to find you.
Yeah, so I co-host a show called The Stock Out with Grace Sharkey every Monday morning at 10 o'clock Eastern, and you can sign up for the newsletter at www.freightwaves.com/The Stock Out.
Good stuff, Mike. Pleasure to have you on. Good to see you in person as well. Amazing stuff. We're out of time, though, folks, unfortunately, but you can find us every Tuesday at 2 p.m. Eastern for the live show. If you want to find the newsletter, Thursdays at 2 p.m. That's right. We're in sync. Join us next week. We're going to do it live.